Dhirendra, Dr. Sandeep Pai has written in. He's 32 years old. He has a 1-year-old son. Now, he's been investing in a few mutual funds. He has a time horizon of 15 to 25 years. He wants to create a corpus that will pay for his son's higher education in 17 years' time. And he also wants to put aside some money for his own retirement, which he hopes to take in about 25 years. Now, he sent us a list of the funds that he invests in. The first on his list is the ICICI Prudential Focused Blue Chip Fund, a large cap fund, 5,000 rupees going in every month. For a 25-year horizon, do you think this is a good pick?
I would like to look at this portfolio holistically because, this is one good large cap fund. But how various funds get combined to make the overall portfolio, I think that is crucial. So if this is 5,000 of the total money which is investing every month, it might be, it might be the more stable part of the portfolio and is a good fund to have.
Combining with that fund is a Franklin India Blue Chip, which is a rather similar fund. It's also large cap, another 5,000 going into that. Holistically, this would be the core holding in his portfolio. Would you recommend he continue investing in both of them?
Yes, if I have to, choose two large cap funds, I would choose these two funds. And so they are the best large cap funds in the large cap universe. Franklin Blue Chip has been a large cap fund over such a long period that I have never seen a drift there. So you are assured of what it is expected to be even through the lean times.
HDFC Growth is the next on his list. A similar allocation as the other two funds. A good complement to the two funds that we just talked about.
Yes, it's a fairly impressive fund, and it is not a large cap fund necessarily. It tries to move through various capitalization or various parts of the market, and has been a fairly impressive fund.
The Tata dividend yield is the next on his list, Dhirendra. This is not one that pops up on your top performers. Would you recommend he continues investing?
It's a reasonable dividend yield fund. Dividend yield funds have made a case for themselves. More so in the past 3-4 years. It may not be the finest dividend yield fund, but it's not below average either.
Alright, he also plans to begin investing in 2 additional funds in addition to the ones that we just talked about. UTI Opportunities and IDFC Premier Equity are on his list. Would you say these are the 2 funds he needs to be adding to his portfolio right now?
They could be meaningful addition, but more so. Of course, his portfolio is complete without these funds as well. UTI Opportunity and IDFC Premier Equity, they are part of many of our portfolios too. And they are worthwhile bets if you are willing to assume little more quote little risk for substantially higher return, and time is on your side. You're investing for next 25 years.
Vinod Desai has written in. He tells us he recently sold some stock holdings and he wants to use the money for a down payment for a home in the near future. He falls in the 30% tax bracket and he wants to know if he would get tax benefits if he invests in a bond fund. So he's trying to right now pick between an FMP and a debt fund, Dhirendra, and he wants to know which is the better option. He has a short-term horizon. He's planning to put this money down for a home. So in terms of tax benefits and in terms of returns, between a debt fund and an FMP, which would you recommend?
If he is sure of the time frame, then FMPs are suited. And debt fund, because the money will be accessible anytime, it could be a compromise. And debt funds are of all kind. I'm assuming that, if it is going to be 3 to 6 months, then he is not considering anything beyond short-term debt fund. Long-term bond funds he should avoid because there is a great flux. There is, about 2 months back, the whole opinion was built around a rate cut. And with the budget, I think that particular view has been dented, or there is a complete change of heart among fund managers, and the outlook looks pretty uncertain. So, there could be a situation that long-term bond fund could hurt you if you are putting your short-term money into such funds. So be away from any category of fund which can go down in value. Short-term funds will not be hurt. The other is invest in FMPs only if you are sure of your time frame, because FMPs are not liquid. They are listed, but you cannot pull your money out at will. So if you are unsure of, if there is a likelihood that you just might have to hit upon the right property and you have to make the down payment immediately thereafter, FMP may not be suited.
So Vinod, if you're sure about your time horizon, an FMP is a better idea. But remember, you cannot pull your money out of that product before it matures.